Welcome to this week's videos or set of videos. It's October the 28th, it's Sunday. I'm talking to you from Koh Samui. I've left Phuket for the weekend and I'm talking to you from my hotel room on Sunday morning. So, this is a chart of the weekly US dollar index, my old friend that's been moving sideways for a significant period of time, as you can see. More positive now after we finally closed a week above the 200-week moving average, the red line here. We've been clearing the 100-week moving average for quite a while. The peaks of these three candles that you see here up around 96.10, 96.15. They've been cleared, of course, and we've closed above them. So it's all looking pretty good. We clearly have to tackle the high for this year at 96.98. Once we get through there, we've got another buy signal. But for now, things are pretty bullish as long as we hold above 96.15, 96.10. That 200-week moving average has a value of 95.80. So below there, the bulls are in trouble. Now, the problem is when you look at the daily chart, we have a negative candle on Friday and we are quite overbought, with stochastics just turning, not negative yet, but certainly turning, and it won't take much to have them cross through that 80 line, which would be a little bit negative in the short term at least. So, just when you think you're starting to get a trend in the dollar index, you get signals to indicate that that trend won't continue in the short term at least. Tricky. So 96.15, 96.10, can we hold above there? If we can't, we're probably going down to 95.80, 95.75, and that really must hold this week. Otherwise, the outlook will turn negative. I really wish I had a nice strong signal for you and I could just recommend buying the dollar index and holding it for a long-term swing trade, which is really what I have been looking for. We are in a bull trend. This could be a consolidation phase, and more than likely we will continue higher, but this negative candle does worry me. I guess I'll just have to see what happens on Monday and see if we do hold above at least 96.15, 96.10. There's no reason why we can't stay in overbought territory, and this and the market can push high. It's really just that little candle there that was worrying me, because this is a potential double top, isn't it? So if you have a small long position, I'd say hold it and look to add on a break above 97.00. But if we do dip lower, I'm just going to have to see what happens around those levels I've talked about. I can't really say any more right now. I wish it was clearer, but that's the way the market is at the moment. I'm going to go straight to the Euro US dollar chart for some backup on my dollar index chart. So we've got this trend line, which isn't actually particularly relevant. I'm going to take it off actually, because what's more important is a 200-week moving average at 113.30. Now, you know that I said a break below 114.30 was a sell signal and we would eventually target 113.30. Well, we got to within 2 pips of it. So I'm pretty happy with that call. There was roughly 100 pips profit in that trade last week. Once we broke lower, we did get a chance to sell it when on that little bounce back up towards 114.20, 114.30. So if you got short there and run it all the way down to, well, close to 113.30, you did okay. In a market like this, if you manage to steal 100 pips on the week, I'm pretty happy with that trade. But having said that, this looks quite positive, really, and it does make me wonder about the US dollar, whether it will weaken. Certainly the euro chart does indicate the euro can strengthen. Now, we've obviously got to get up through 114.30, 114.40 for that to happen. And I do believe that we topped exactly there on the bounce on Friday. So, yeah, 114.20. So, clearly that's what's key. 114.20, 114.30. We get above there. It looks like the dollar's going to weaken. We reject that. We can come back down and retest that 200-week moving average or close to it around the 113.30 level. And it's just a question of which one of those breaks. I guess that's it for all I can say right now. For the Aussie dollar versus the US dollar, I still think that this, what is it now? This 14-year trend line, is it? What year is that? Anyway, this 14-year trend line is still relevant, and that is around the, let me try and get a value for that, around the 71.35 area. So we didn't manage to get back up through there on Friday. Let's have a look at the daily chart or weekly chart for a little bit clearer outlook. Okay, so you can see the trend line held perfectly. Actually, last week at least, we had a high of 71.26. So we're just not able to get back up through that trend line. So as long as that remains the case, the outlook's negative for the Aussie dollar versus the US dollar. Looking at the daily chart, not telling us much. We're very clearly in a bear trend. Okay, this is a significantly bullish candle here, though. You see this hammer with a very long tail. So buyers really did come in. We broke the previous low at 70.39, got down to 70.18 on Friday, and a big hammer does indicate it's quite a bullish move. And we've even got diverging stochastics down here. So that's actually quite a short-term bullish picture. I'm not saying it's a big buy signal, but again, this does indicate that the US dollar could weaken against the Aussie dollar. Who knows? We could even get up to 71.70, 71.80. That would be a 100 pip rally to some fairly strong resistance up there. I wouldn't rule it out. New Zealand dollar, I don't have to spend a lot of time on. It's very clearly in a bear trend also, and we do not have, well, we have got this hammer candle, again, similar to the Aussie, but not as important because the Aussie broke the previous low and then spiked up and formed the candle, which in my view, is far more positive than this, where we didn't actually challenge the previous low yet. It's also got a red body on the candle, so it's less positive. Anyway, you do get these things in a bear trend still. Maybe we can get back up to 65.70, 65.80, but I would suggest not much further than that. The Aussie dollar and the New Zealand dollar still remain in a bear trend. So although we might get a bounce back, and again, although we might get a dip in the dollar index, I can't turn negative on the US dollar yet. Dollar yen, the buying opportunity, which had worked for 2 or 3 days before around the 112.00 area, failed on Friday. And as you see, we collapsed down to the next buying opportunity, and that worked really well. We had the 100 and 500 day moving averages down there, and we had also the 100 week moving average down here. So bounce straight off there. If you got long, that worked really, really nicely. The levels working okay in the Japanese yen of late, and quite pleased with that because sometimes this can be a horrible pair to trade. You can see here, up for a day or two, down for a day or two. There's no trend, so you really have to scalp when you get some decent levels. You really have to scalp, take the profit quickly, and wait for the next opportunity. There is no trend to rely on for a swing trade. This is the chart for the Euro Yen going back to March. If you can make sense of that, you're a way better analyst than I am, because that is just a mess. To me, I'm not even going to bother to comment on it. I don't know what's going to happen in the Euro Yen. Cable has been trending lower through last couple of weeks anyway, in October, as you can see. Now, the pound has hit this trend line, which goes back to May. So we bounced nicely off there, and we have got a small bullish hammer. So we are oversold as well. It looks good enough to me to suggest a recovery at the start of this week. How far that goes, I don't know, but maybe we could get up to 129.20. That would be a 90 pip recovery from where we closed on Friday. That's the best I can say at the moment. It's all Brexit led anyway, isn't it, pound? Canadian dollar, what a mess. I have no idea what to do with this. We've had some good winners in this, but we've also had some losers. The winners have probably, they've certainly made more money than the losers have lost. I mean, that's all part of my strategy. Risk 20, 30 pips to make significantly more than that, but I'm not enjoying trading this pair at all. I'm not trading it, in fact. I've no idea what happens with it. Next one. The outlook for gold is quite positive. It's painful for bulls, which is just typical of this market. You really can't decide where it wants to go. It's pushing higher, but as you can see, every time we push higher, we run into sellers. All these candles have got long upper wicks, so we're trying to make some progress. We hit sellers, we come back down, make some progress, hit sellers, come back down. Friday, we finally broke up through 1240. We only reached 1243. I didn't think that would happen. I didn't think we'd reverse from 1243. I thought we would at least hold above 1235, 1236, but again, this is quite a negative candle. You don't want to see this in a bull trend. You don't want to see this long upper wick, and then the body at the bottom, this shooting star type formation. So although we're making slow, steady progress on the upside, the candles are not really confirming a bullish move. We're very overbought, so maybe we do need a correction. I still feel quite bullish for gold in the longer term, but wow, this is so painful. Now, the 200-week moving average around 1234, 1233, as I say, we did not close above that. We didn't even close above the high of the of last week's candle at 12.33 and change. We closed around there, but we should have closed well above it if this was a market where bulls were fully in control. So I'm concerned about a bit of a pullback at the start of the week at least, and we'll just have to see how far we pull back and if we can hold some support. The support levels are on the report, so I won't go through them all again here. Silver certainly doesn't look anywhere near as positive as gold has. The selling opportunity around 14.70.75 has worked. We have held below 80, which is where our stop would have been above. So if you've been selling at 75.70 all week, that's worked well. 50, the low 14.50 areas also work to support, so scalping those levels have worked. There's nothing else I can say to you. You can see every time we head up, we get a long upper wick on the candle, showing that sellers are coming in. Even on the downside, we're getting some long shadows here too, so the market just doesn't really want to go anywhere. If you're scalping it and making money, just be happy with that and we'll wait for a break. Obviously, this little trend line here around 14.80, yeah, 14.79 if I'm going to be completely accurate. So a break above last week's high at 14.80, call it 14.81, should be a buy signal. And maybe we can then break up through 14.90, which is the high for October, and head up to the 100-day moving average at 15.10. That's what I'd like to see. A trade that we could run a little bit would be nice. Until then, we're just trading in that triangle.